Buffett blames the massive stimulus during the pandemic as a key reason that we are seeing inflation now. And I think this is absolutely obvious. He says, look, when you print loads of money, money is going to be worth less, separate from worthless, but worth less. Okay, that being said, Buffett had great things to say about J-Pow. He said in his book, J-Pow is a hero. I don't think a lot of people in the stock market right now would agree that J-Pow is a hero, but to some degree, it's important to remember that J-Pow kind of stopped a lot of the liquidity printing that was happening in probably around the summer of 2020. But it's Congress that just kept going and more stimulus. So the monetary side of a stimulus, like for example, the Main Street Lending Program or some of the other bailout programs, that they were really underused by the Fed. The Fed was actually surprised about it. They're like, oh wow, we're barely even using these programs. It was more like, I think they only bought like 80 billion in bonds or something like that, corporate bonds, or if that. It was just sort of like the sentiment that, oh yeah, the Fed's going to come bail us out. But it was really Congress that's like, anyway. Munger also talked about risks he's willing to take on investing in Chinese stocks. And I thought this was interesting because personally, I'm like, I am not going near the Chinese stocks because Chinese consumers like, hell no. We saving money. We're not spending it. He says, the reason that I invested in China is I get so much better companies at much lower prices, and I'm willing to take a little bit more risk to get into better companies with lower prices. Other people might reach the opposite conclusion, and everybody's worried about China now, or more worried about China now than they were worried about more than they were 50 years ago. Okay, they're more worried today than they were 50 years ago. And see, that's really interesting because really what he's saying is, hey, like, yeah, we realize there are a lot of risks investing in China, but it's creating this wonderful, buy the dip opportunity essentially in Chinese markets. Now, I personally don't like the idea of buying ADRs because you have the delisting risk from the SEC. But hey, if you had a way to get direct access to Chinese stocks, it's not a terrible argument that, sure, short term, maybe China's in recession. We're getting misleading data, right? But maybe it's an opportunity to buy the dip. So very, very interesting. Buffett says that he looks at Berkshire as a painting. And it's ultimate, and it's really an unlimited painting in size. That he's got this ever-expanding canvas, kind of like the universe, and he gets to paint wherever he wants. I thought that was kind of interesting, and also somewhat inspiring. But anyway, Buffett said Berkshire has been increasing its stake in Activision. This is a merger arbitrage bet that Microsoft. Remember, Microsoft is buying Activision Blizzard. Some folks rumor that the reason Microsoft is buying Activision is in part to get the CEO out of Activision and try to like clean house a little bit. I think that happens a lot at companies. Like Microsoft doesn't necessarily really want Activision, but it's like, okay, well, we can like basically buy a wedge deal because it's mismanaged, get rid of the management, and then profit. Kind of, in my opinion, like what you're seeing with Twitter. TBD. Anyway. So Berkshire in Q4 purchased $1 billion of Activision. They suggest they had no prior knowledge of Microsoft plans to buy the company. And that may be true, but when you read between the lines, there could be prior knowledge that somebody was going to buy Activision. No prior knowledge it was going to be Microsoft, but I knew somebody was going to buy. Well, if it was anybody but Warren Buffett, people would be all up in that yin yang trying to figure out about insider trading. Anyway, in January, Microsoft obviously announced their intentions to buy Activision for $95 a share. It actually closed for $75.60 on Friday, so who knows? But then again, the market price is in the risk that these deals won't actually happen, right? This is the same reason why Twitter is selling for less than $54.20. Buffett says they own about 9.5% of Activision. Let's see what else he has. Going back a little bit to inflation, he mentioned that inflation swindles the bond investor who keeps their cash and the person who keeps their cash under a mattress and the poor folks. It pretty much swindles everyone. Inflation is really, really bad. And we've kind of seen that dialogue change with Jerome Powell as well. Initially it was inflation is transitory. Then it's like, well, it's still kind of transitory, but it's less transitory. It's just lasting longer. And now it's like, oh gosh, we got to deal with inflation. Charlie Munger had a nice little slam on Robinhood. He called it an example of a good idea that has gone grossly overdone. Munger said that hidden kickbacks of that business model are quite frankly, quote, disgusting. And he says that Robinhood is, quote, unraveling and that God is getting justice. I mean, this is like such a horrible slam on poor Vlad, which Vlad's kind of gone dark. I'm like, hey, yo, Vlad, when are we gonna do another interview? I think the world wants to hear from you. Now, a lot of people, when I say that, they're like, oh, Kevin, why would you interview him? I don't know. I kind of like interviewing controversial people because I think it's very interesting. I wonder what it must be like being Vlad right now. Anyway, so at the beginning of the Berkshire meeting, there was talk about that if something is not a productive asset, it doesn't produce anything, then Buffett won't buy it. And this is when he really took the opportunity to slam cryptocurrencies. He talked about whether it goes up or down in the next year or 5 years or 10 years. He has no idea. But one thing he knows for sure is that it doesn't produce anything. And he wouldn't even buy all the Bitcoin in the world if it was $25. Okay. So, and let's see here. He also goes on to say, I don't think we've ever made a decision where either one of us has either said or been thinking we should buy or sell based on what the market is going to do, or for that matter, on what the economy is going to do. We don't know. And this was also really inspiring because it's like there's so much to look at, and it's just like, oh my gosh, it's like it puts you in a dizzy. And so this is actually one of the reasons I've gone so heavy on just buying Tesla, because I'm like, boy, oh boy, I read a report the other day that, and I've got a few other companies as well, but I read a report the other day that this has been the hardest market to time in 50 years. And so even if you time some parts right, boy, oh boy, what's around the next corner is just insane. Anyway, so for me, I'm just like, all right, well, where's the next opportunity, I guess, to buy my three faves, So anyway, Charlie Munger had some words about these calls about removing Buffett as chairperson of Berkshire because Buffett's old, blah, blah, blah. And he said it's like Odysseus would come back from winning the Battle of Troy and so forth. And some guy would say, I don't like the way you were holding your spear when you won the battle. In other words, talking about how ridiculous it is. Buffett's helping win the game, and people calling for his removal are just obscene. Buffett talked about his struggle of finding good businesses to invest in, and he's they're absolutely searching for deals, but they have to be sizable deals. He says, we'll pay any price, climb any hills to find businesses, but we actually prefer when they fall into our lap. I kind of think that's great. And it reiterates this idea of having cash on the side and being ready, being prepared to be able to make acquisitions rather than being all in and being on margin, which is just a complete disaster. Buffett, kind of goes back to his confidence on the Fed a little bit, talked about short-term volatility that's fueled by gambling mentality. This is something that they do their best to absolutely avoid. And they also bought the dip quite a bit in Q1. Big stake in Occidental Petroleum, Chevron. They increased their stakes in, and they bought multiple other stocks. Really, they're buying these as opposed to buying treasuries, which makes sense because I think treasuries are just getting reamed. So anyway, today he talked about the fact that Berkshire will likely always be cash rich because he thinks that they are actually better than the banks in extending credit lines to companies in need. And really what you do in that case is you're like, sure, we'll give you a credit line in return for some equity, some cheap equity. And then, of course, from the start of 1965 to the end of 2021, end of 2021, worth noting. I mean, although Berkshire has been holding up quite well, it's actually been doing very well. So anyway, from 65 to the end of 2021, the per share market value of Berkshire Hathaway had an annual compounded return of 20.1%. That's nearly double the S&P's return of 10.5%, including dividends. Really incredible. So this gives you a little bit of an update on what went down with Warren Buffett and Berkshire Hathaway this weekend.